Hello everyone and welcome to this weekly technical analysis video. It will be a packed week of several central bank meetings. The Fed will announce its rate decision on Wednesday. The European Central Bank will decide on interest rates on Thursday. And finally, it will be the Bank of Japan's turn to review its policy on Friday. But before we get the central bank rate announcements, the US CPI inflation figures will be important to watch on Tuesday, likely affecting rate expectations for the Fed's policy meeting this week. Looking at the US 500 stock index now, the index has been rising on expectations that the Fed may pause tightening, but if the CPI inflation figures suggest otherwise, if they show a more permanent inflation, which could consequently debate the need for a pause, that could pressure the US 500 index lower, especially if the index also closes below this ascending line over here coming from the pandemic lows at 4,280. A downside correction cannot be ruled out given that the RSI and the stochastics are very close to their overbought levels. A break below that point over here at 4,280 could initially find support around the 20-day moving average at 4,218, while lower than that, the 50% Fibonacci tracement of this downtrend over here could also support the market along with the 50-day moving average around 4,150. Technically, the RSI and the stochastics haven't confirmed overbought conditions yet, so the bias is still skewed to the upside, but for the index to rally higher, we would like to see traders would like to see a clear close above the 4,325 high. That is the high from August 2022. This is also where the 61.8% Fibonacci level is located, so a clear break above that point, above that region, could initially drive us up to the 4,380 barrier and then probably closer to that tentative ascending line at 4,440. We may face some congestion here before we reach the 4,500 psychological mark. And now turning to the ECB rate announcement and euro dollar, investors are certain that the central bank will deliver another quarter percentage rate hike. That is fully priced in, so the rate decision itself may not affect euro dollar much. Nevertheless, surprising hawkish communication could boost euro dollar above this falling ascending line at 1.0770. The 50-day moving average could block the way higher at 1.0812 in this case. If not, then the recovery could extend towards that broken ascending line coming from the 10-year low of 0.9535 registered back in September. We can see that both the RSI and the MACD down here have been improving a bit, but they have yet to enter clearly the bullish territory. So some caution may remain in this market. If we fail to overcome the 1.0770 region and that long-term descending line, the 23.6% Fibonacci of 1.0730 could come into view. Lower than that, it will be interesting to see whether selling pressures could break the flattening 200 exponential moving average at 1.0690 and head towards consequently drives us down to May's low 1.0634. If that fails to hold, then the sell-off could strengthen, likely towards the key base of 1.05, where the price rebounded a couple of times since the beginning of 2023. A break lower from here would neutralize the medium-term picture. And finally, looking at dollar yen and the Bank of Japan's policy announcement, rate expectations are for the central bank to preserve its super accommodative monetary policy. There was little argument for any change in policy, although some investors believe that the hawkish shift could still take place this year. Nevertheless, surprising hawkish Bank of Japan could drive dollar yen lower, especially if the 20-day moving average, exponential moving average at 138.77 fails to support the market. Then we may see a fast decline towards the 136.65 region. That is where the 38.2% Fibonacci retracement of this downtrend over here is located. While lower than that, I would keep a close eye on the 135.55 and 134.85 zone, where the 200-day moving average is placed. Now, in the event the Fed appears more hawkish than Bank of Japan, if it uses a more hawkish communication, that could resume positive momentum in the price. Technically, for that to happen, the price will need to close above the 50% Fibonacci level of 139.6, and then above this short-term resistance trend line at 139.93, in which case, if that proves to be the case, we may see an upturn towards May's high of 140.91, while a steeper increase from here could probably face a challenge around 142.15. That is where the price posed back at the end of November. And if buying appetite continues from here, then the next barrier could emerge around this strong resistance line at 143. Now looking at the technical indicators, all the indicators have been sloping downwards lately, so there is little support for the bullish case. Some caution may remain, and selling pressure. However, selling pressures may not emerge unless the price drops below 138.77. So that's all for this week's technical analysis review. Thank you for watching, and see you next time. Bye bye.